Welcome to the Capital Exchange. I'm Steve Welber, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, the Fed has been left with no choice but to fight inflation this year versus trying to save the financial markets as they've had to do in the past. We have seen the effects of rising rates on the stock prices, bond prices, and more recently, it's been showing up in the housing markets with these climbing mortgage rates, even though historically aren't high. It's just they're much higher than we're used to.
Much higher than we're used to. But for now, Steve, the era of free money's over. Cost of capital is climbing, and whether that's equity or debt capital. So quality becomes even more important in these environments. Corporate debt, or the money companies have borrowed, isn't paid off each year that those bonds mature. A good chunk of it is rolled into new debt. And with higher rates, companies that have debt maturing over the next few years will feel that sting of higher rates or cost of capital, because that means more money is going to be going to debt service in the future, and that's going to damage profitability.
Yeah, Travis, that's true. And in fact, roughly 20% of outstanding debt for S&P 500 companies comes due over the next 2 years.
Fifth.
Yeah. And currently, the weighted average coupon on that debt is only 3.49%. As you said, expect the higher number or higher increases in the future.
It's not going to be 3.49.
Not anymore.
So companies that have taken care of their balance sheets and have some reserves for the hard times and that generate enough cash to self-fund themselves, cover expenses, capital expenditures, research and development, they're going to be much better off in this environment. You know, free cash flow is the term of the day, and that's true whether we're investing in the company's stock or the company's debt, because with debt, you're focusing on their ability to make their interest payments, even in potentially higher interest rate environments that we're going to see here in the future. So stay tuned.
Yeah, Travis, it's been great. I look forward to it next week.
Look forward to it as well.